Thank you. I am gonna share my screen here. Let's make sure that is showing up. You guys able to see that?
Yep.
All right. Great. Well, I hope we're ready to roll up our sleeves a little bit here because we're gonna get down into the weeds. Um, all right, so blockchain data is hard. If you guys are working in the space already, I'm sure that you probably are aware. And Noves, our mission is to make it easy so that you can focus on what you do. And um, I think that for probably a lot of people who'd be on this call, you're kind of in a similar sort of role where you're trying to help people not have to spend all of their time figuring out what they did and what to do with their books so that they can keep focusing on the things they're trying to build and what they're trying to do. All right, so Noves, we're a data access company. We're building a data access stack for blockchains to make it easy for people to get the data that they need. We spend all of our time every day working on deciphering and understanding what's happening on chain and what did happen on the chain. So we translate raw data, we try to find its meaning, and we try to organize that information in a way that is easy to retrieve and easy to understand. So the types of data we deal with security and safety data. So we help people understand what they're going to do on chain before they do it so that they aren't having their funds stolen or their accounts hacked, that sort of thing. We deal with financial data, which is going to be relevant today. And then we deal with kind of raw, more technical and block explorer type of data. It's kind of the major groupings. We're on a whole bunch of blockchains. There's a bunch here. We're actually on more than are even listed here. We're pretty broad and we're always adding new chains. We really want to be everywhere that anybody cares about, basically. Okay, so I just want to talk a little bit about, in general, the type of problem that we solve. So if you've ever used MetaMask, you've probably seen a screen like this. There's a whole bunch of data. Most of this you probably don't care about. I know I basically never care about all of these individual pieces of data that are here. What I really want is a simple piece of data like this, which you never get in MetaMask, which is just telling me in general what it is that I'm doing or what it is that was done. Same thing here, if you look at your history, you really can't make any sense out of this. And even though there's a bunch of things listed, it's not very meaningful to me. When what I really want is something that helps me remember what it was that I was doing when I was transacting on the chain. And so our focus is on trying to bring data up to this level where people can understand what happened and what was going on. Okay, so the problem is that people keep building new things. They keep building new protocols. They keep building new applications. They keep building all kinds of new stuff. And those people don't care about you or me and what we're supposed to do with the data that is created by those new things that they're creating. They go and build something new and it has some data stream, and then we're left to kind of pick up the pieces after the fact and understand what's happening. And nobody gives much thought to how accountants or tax professionals or anybody in reporting is going to deal with what it is that those people have built. But is it really that hard? I think that if you look at a lot of transactions, you'll see useful information like, hey, there was a swap event and it tells you what was swapped and how much of it was swapped. And it shouldn't be that hard to figure out what happened. But if you spend a lot of time dealing with this stuff, you're probably aware that there are a lot of problems lurking underneath the surface that make this a lot more complicated. Okay, so in order to understand a transaction in a way that's useful for a customer, for someone who ran that transaction and who needs to account for it, there's two things we need to know. We need to understand what it was that happened in the transaction, and we need to understand who we care about within that transaction, because a lot of times there may be quite a lot of parties involved that are not relevant to us. And so we need to know not only what was happening, but also which parts of that matter to us, or which parts of that matter to the person whose, whose accounting we're working on. A lot of times those other parties are, intermediary contracts. They're, if you're looking at like swap aggregations or something like that, there might be a lot of different swap protocols involved. And there's going to be a lot of transfers and a lot of activity that don't have any relevance to the person whose data we're trying to look at. Okay, so let's get into the details. I want to say before we go too much further, my goal here is to help you understand what you need to understand to do your work. So feel free to jump in with a question or whatever. I'm totally happy to go completely off script, pull up transactions, look at anything. I'll try to leave a little bit of time. So if there's specific things that anybody wants to look at, we definitely can, but I'm happy to be interrupted in the middle of this too. So by all means, feel free. And also, I'm going to sort of target a relatively, I'm going to assume that you don't spend all of your time digging through data on the chain. So I will be, trying to fill in gaps on those things. If I'm not giving you enough information, let me know. And if it's too deep down, you can tell me that too, and I'll bring it back up a little bit. Okay, so the basic process when we look at transaction is we need to figure out the function that was called, because that defines the activity that's going on. And then we need to look at the events that were coming out of that transaction. And then we can use the data from the first two things to kind of decipher what it is that happened, right? We put those pieces together. So we're going to look at a basic swap transaction here. This is what you would see on Etherscan. If you pull this transaction up, you can see that there's a couple of tokens that were transferred in here. So generally speaking, it is likely that your customer is probably going to be, the person listed as the from. Not always. We do pull data for people who are the protocol. If you're doing the accounting work for Uniswap or something like that, then you would be on the other side of this. But most of the time, what we see was people pulling data. The from is the customer. So we can kind of identify here that this is the same address that we have in the from. So we know that this is tokens coming out of our customer wallet, and then here's tokens going back into our customer wallet. So if we look at the actual, sorry, let me back up. The actual transaction here is that we swapped these tokens for these tokens, right? So this is where we want to get to from this transaction, is we swapped CVX curve for curve. And the way that we arrive at that is first we look at the function. I'm going to pull the, just back up really quick so I can grab the actual link so we can look at it. I have here. Etherscan's gonna, well, I'll let that run while we click through here. So we look at the function, and the function is exchange. It's not always going to be the case, but in this case, that lines up with a concept like a swap. So it's kind of easy for us to guess that that's what's happening. And then after we've identified the function, we're going to go look into the events. And in our case, I should back up and say, so events that are emitted from contracts are at the discretion of the developer. And as I mentioned early in the process, they're not really thinking about you or I and how we're going to deal with this. So whether the events that come out of a transaction are useful or not, it is quite variable. Sometimes some contracts are really well built and we get nice events and they tell us exactly what happened. And sometimes we don't get any events. And sometimes we get sort of like distracting events that have weird names or don't do what they say they are, because not all developers are amazing developers. So get this to verify that I'm human here. So a lot of times what we do is we ignore the events that are coming out of the contract itself, and we look to more reliable events. So I'm just going to show a couple things here. We open this up. So if you want to find the function that was called, you're going to scroll down here to the more details. You can click to open this thing up. And here is the function that was called exchange. That's what I was showing in that screenshot before. And for events, we're going to look in the logs here. So in this case, the protocol that this transaction was running through does emit an event that tells us that there was a swap. They have their own event here called token exchange, but it's not always going to be the case. What is always going to be the case when there are tokens is that the tokens themselves emit events. So here, this CVX CRV token that was transferred, this token here, when it was transferred, it emitted an event that said, hey, I was transferred. And likewise, there's a transfer event for the CRV token that said, hey, I was transferred. And the tokens implement a standard, and they always emit those events, except in, I mean, always is a relative term. There are some very, edge case kind of situations where developers build sketchy tokens that don't do what they're supposed to do. But in general, most tokens are going to always emit events when they move. And if those get moved through a swap protocol or through some sort of liquidity event or staking, or regardless of why they're moving, the transfer always has an event that says that they moved. So if we can't figure out what happened from the actual contracts events, we can always look and find these transfer events that tell us what happened and who moved tokens from where to where. The other thing is sometimes even if they do have events, they may not have, in this case, this transaction says I sold this many tokens, I bought this many tokens, but it doesn't tell us in the event what tokens were bought or sold. It just says, hey, you swapped a token and you bought a token. And so it's a good example of where we need to use these transfer events to figure out which tokens it was that moved. All right, so we know we swapped these two tokens. The transfers tell us how much there was. I'm just going to mention that the values you're going to see if you look in the raw data are going to be really large numbers, because on chain they're stored in a format that doesn't have decimal places in it. So there's some conversion that's got to happen when you're looking at those numbers. Okay, I guess that was the end of that example. So we get the values for, we know it was a swap because we saw the function name that said that it was an exchange, and we know the amounts that were exchanged either from the event or from looking at the transfers, and we know the tokens that were moved by looking at the transfer events. All right, so that was a really easy case where somebody interacted with a single protocol. They sent one token, they got one token back. So here for this transaction, there's 3 transfers that are taking place in this transaction. And so it's a little bit less clear. If we look at the events, you can see in this picture, there's 13 events in here. So digging through these is going to be a lot of work. In the end, this is a swap. So we swapped one token for another. And what happened here was that there was an intermediary hop. So go back to where it's on grayed out. This is our initiator, this B58 account. So the B58 account sent the HOPE tokens to some kind of an intermediary. The intermediary sent them to somewhere else, and then the somewhere else sent the trades back, right? So probably in this case, it was two pools in the same protocol, two different pools that it traded through. Although since this was an aggregator, it is possible that it was actually two different exchanges and they just routed it around there. So the only thing that we care about is it was a swap of one token for another. If we look at the function, in this case, we have swap exact tokens for tokens, which is a nice, very specific method. This is a Uniswap v2 format. This is how they do their names. And these also have, we always have the transfer that we can rely on. In this case, the Uniswap events are pretty good. So they would have all of the data that we need in the actual exchange event if we needed to find it there. Okay. So here, actually, before we go any further, does anybody have any questions about what we've covered so far?
I think we're good.
Okay.
More of just a comment on my end. Just
Yes.
this is something, and it looks like Squeeze has a question he's throwing in there too. But like, I imagine that a lot of people, a lot of accountants are typically using a software of some sort to do some of this work of like you plug in the wallet and it's going to give you, all of these transactions were whatever. It was this, and then it's up to you to kind of determine that tax strategy based on the actual transactions and what was deciphered. I know that this was a swap because the software tells me it is. But in a lot of cases, as we'll see, like Ben goes further, those softwares often cannot accurately tell you what actually occurred on chain. And so now it's up to you to try and figure it out, which is where I think like a lot of this comes into play.
Yeah, it's a good point. I mean, I think it's ideally you don't want to have to spend a lot of time doing this, but it's inevitable, I think, that if you work on this type of stuff, you are going to run into things where you are going to have to go look at it yourself and understand what happened. It's just going to happen. All the software is going to drop the ball sometimes, or give you a wrong answer, or just be confusing. Like, why is this what I'm seeing here? And so being able to go and look at it, I think is important, and to understand, what you were
I can
seeing.
attest to that for sure. Like every single crypto tax subledger subledger for accounting or even crypto tax work. I always find myself using, like, looking at stuff on chain, pulling up what's going on, because you're not gonna have documentation from the client on every single transaction. So there's times where you have to investigate what's going on to be able to try to decipher it, so that you don't have to have a list of questions to your client that's like 500 transactions long. There's certain stuff that you can look at on chain and reasonably understand relatively easily what's going on, like you're describing with the swap transactions. I don't need to ask a client about that because I can see on chain what's happening. So the more easy it is to be able to read on chain data, the less you have to bother. I don't want to say bother your clients, but go back to the client and ask them the questions, because you're able to view it and see what's happening on chain.
Yeah, absolutely.
I think the beauty of it too is, I mean, that's what it's there for. It's there for us to look at it. It's there for us to better understand. And if you're just relying on what your software tells you, your subledger, your tax software, I mean, do you really understand the fundamentals and understanding how Web3 works and how blockchain works? I mean, it's like having an iPhone and only using it for the calculator. It's just not. There's so much more under the hood. And I mean, if you go in the community and you look at some of the courses that Taylor's done about reading Etherscan and things like that, he just says this whole section we don't know about it, so it's just there. And it's like you have to dive into this stuff eventually, and that's why we're here, and I love watching this, and I'm excited for you to keep going.
Yeah, so there's a question here about why wrapped ETH was used in this transaction. So if we look at this first intermediary here, let's see, that's the token.
Well, it needs to be wrapped to be able to be used in a smart contract, right? Like,
Yeah,
the
yeah, but
trend-
I think the question is why this appeared, because the token that was spent was Hope and the token that was returned was BTC. But what happened was there was no, so the person asked to swap Hope for BTC, right? But there was no pool that had Hope and BTC in it. And so the router, this Firebird aggregator router, it looks for a path that gets it from token A to token B. So first it had to swap the Hope for ETH and then the ETH for BTC. And as Taylor's saying, the reason it's wrapped ETH, well, in this case, this is on Polygon, so it would have to be wrapped ETH because that's the only type that there is. But even on mainnet, in pools, you're going to find wrapped ETH, and that's because ETH is the native coin is a special case, and it doesn't implement that token standard that has like the transfer functions and stuff like that in it with the events. So you have wrapped ETH, which lets you take the native ETH and put it inside a container that works like a token so that it can then be used in all of the other parts of the system, all of the swap pools and things like that, because it can be treated like a normal token. So
That's really, I'm glad you articulated that because I've understood that, but I've never thought I've never thought of mentioning it out loud because first of all didn't make the full connection that it was like, okay, yeah, it's because of the smart contract until just now. But I'm glad that you articulated that as you did because really good way to represent it. It's not the native asset. It doesn't have that same functionality as the
yeah,
tokens you
exactly.
build upon it. So that's really cool. I had an
In
aha moment. Thank you.
in early days, there was a lot of like special casing, like if it's ETH, do this, and if it's a token, do this. But that wrapping lets you get rid of all that extra code. Uh, okay, so another type of situation that you can see that's going to look different. I mean, you can see right off this looks more complicated. In this case, this is a limit order. It's still a swap, but it's a situation where a person placed a trade and said, I want the trade to execute at a certain price. And so the swap didn't happen when it was placed. The swap happened later when some sort of a keeper or some sort of a process ran to execute it at that price. So the actual wallet here, this is our the same address we were looking at in the last transaction, this B58 address. So this is the one where the swap took place. In this case, this would be the customer wallet, but it isn't the from address. The from address here is someone else, which would have been, I presume this was executed through 1inch, which is a swap protocol. So this B58 address would have placed an order and said, hey, I want to sell balancer tokens for USDC. And that order went into some kind of an order book somewhere. And then later, when the price arrived, whoever is the owner of this address executed the transaction on behalf of the customer wallet in this case.
So I have a question about this, not to put you on the spot, but because I've used 1inch to place limit orders and I didn't really fully understand how it worked.
Yeah.
And so what you're saying is if I've signed this transaction for that limit order, my wallet would allow me to would those funds that were in my wallet be locked in that smart contract until that gets placed, or is it remaining in my wallet?
It depends on the protocol. Typically, the way they would work is that you approve them to spend those tokens, and then they have an order. So then at the time they execute the transaction, they pull the tokens out of your wallet and do the trade at the time.
Okay, so
Usually,
but what happens if I guess the question I always had in my mind is like, what if I've spent those tokens in the meantime? I guess
then
it
the
would just
order would
fail.
fail.
It would
Then
fail.
the order
Okay.
would just fail.
And we would get charged the gas fees for trying to have it go, but then fail.
No, because the way that transaction would work is the transaction wouldn't be able to execute at all because the first step of give me the tokens, they're just not there. So the transaction wouldn't use any gas in that case.
Very cool. Okay, so you're approving it for that exact amount
It
for,
depends. Again, it depends on how the person wrote the,
I guess, because if someone only fills part of your order, you would have up to a certain amount.
yeah.
Okay.
I mean,
cool.
some ideal, like in an ideal world, well, this is a little bit, the answer here is not obvious because the thing is running the approval costs gas. So if you approve just the amount you're going to spend, it's the safest because they can only spend what you told them to spend. But on the other hand, if you then do another sale, you got to approve another amount. So sometimes the protocol will do a larger approval, and then you can just do a signature with them to do more sales or more, transactions. Or sometimes they'll approve right up. Or I've even had it offer me the choice of, do you want to approve this just the amount, or do you want to do this for a higher amount?
I mean, it makes more sense on ETH to do something like that.
Yeah.
Set a higher limit that it does on like Polygon or whatever.
Yeah, exactly. On,
You have
on,
liquidity
on a
gas.
cheap chain, you can approve it as you go. And
Cool. Thank you for that. Awesome.
um, okay, so here are the two final, when we're looking at this and we're trying to understand what's going on, all of these intermediaries, are just steps in between different contracts and different pools. And ultimately, we can see the address, our customer address that we care about, highlighted here on the tokens that finally arrived and the tokens that were sent in. This one, it's kind of nice because they're actually sandwiched. Sometimes they're mixed in the middle. It's a little harder to see them. So the function here is settle orders because again, it's the protocol that has some sort of a bot or some sort of a process that runs this thing instead of a swap. So settle orders, they're basically going to send a bunch of data about my order into their contract to tell it to make that exchange between the parties that had previously placed those orders. Again, we use the transfers when we process these. You could see them, I think, in the screen that we looked at before. Okay, so those were all the easy situations. Unfortunately, things get a lot worse, especially as protocols get more sophisticated. And I mean, it's kind of the nature of our space is that somebody builds something and then somebody builds something on top of that thing. And then somebody thinks of a cool way to combine those with another thing somebody built and they build on top of that. And so you kind of get these layers of complexity that that accumulate over time. And we're stuck trying to figure out what to do with it after the fact. So with this transaction, I'm going to pull the actual transaction up so we can look at this one. So with this transaction, if we go down and look at the function here, we have multicall. So this is the least useful thing that we can find when we go looking for a function, because multicall just means that whoever's calling this is going to tell this contract a bunch of other things that it wants the contract to do. And multi-call can be literally anything. It could be swaps, it could be votes, it could be staking or unstaking or all of the above. So we can't actually learn anything from the function other than we know that it's going to call some other contracts and do some other things. So the way that we have to interpret this data when we see a multi-call, at the end of the day, this is just a simple swap, even though it doesn't look like it. This is going to be a Uni v3, Uniswap v3 clone. This is how their swaps look. So this multi-call thing is actually a series of instructions telling this contract what we want it to do. So instead of just identifying the function and then going and look at these things, if we find a multi-call, we have a whole other step where we have to look at what all of the subcalls are of what this thing is doing. And then we can figure out what's going on here. So this data that's getting dumped in here, this stuff down here. I don't think we're going to get anything useful out of this. Yeah. I mean, this data here is basically a series of other swap functions. Exact input is one of them. There's a couple more in here. Swap exact tokens for tokens, which we saw before. Swap exact tokens for tokens. So each one of these lines is actually a swap command that this contract is running. And it's like the one transaction we looked at earlier where it has to go into one pool and then into the next pool. It's just got a different structure for how it makes those calls. So at the end of the day, we did a swap, which went to a different kind of a swap, which went to a different kind of a swap. And when you add those together, it's really just a swap from one thing to another. So at the end of the day, it was just another swap. And that's the same way that we had looked at those things. Okay, so there's one other sort of just another swap. That's right. There's one other complication here that kind of adds a layer to this. I don't know if you've heard about smart contract wallets, or it could be called account abstraction, or 4337 for really technical people. But a smart contract wallet is instead of a wallet that you just own and control on your phone or on your computer. A smart contract wallet is a wallet that's actually a contract that's been deployed onto the chain. And there are a bunch of advantages and reasons for using wallets like that, like being able to recover them and being able to have some additional functionality that happens in them, being able to have your gas sponsored. There's a lot of reasons that people are using these. Once again, when they came up with this amazing innovation, they didn't put any energy into improving how the data was going to be for those of us on the back end of this. So when you look at a smart contract wallet call, instead of a swap or a multi-call, you're going to get this thing called handle ops. And handle ops means that it's a smart contract wallet. And when we see this, it looks like this, handle ops with a tuple. It kind of looks like the multi-call. It's a little bit similar in that there's a huge blob of data that gets handed in here. When we find this, the first thing we do is we figure out where this smart contract is or what the smart contract is. And then we can go to that and find out what to call. This is too much detail for this. Let me see if I can get the, I missed the, grab the link to this transaction. The unfortunate thing about smart contract transactions is they're still trying to figure out how to deal with them well in the block explorers. So unlike a lot of the other transactions, these are a bit uglier and a bit harder to decipher from looking at them. Before this, when I was actually putting this stuff in the deck, I was trying to make sense out of what I was seeing when I was looking at this here, because here we've got a from address, and the from address isn't involved in any of the trades. We have a contract address here, which is also not involved in any of the trades. And there's another address here, which is also not involved in any of the trades. So there's a lot of different addresses, and it doesn't really make a lot of sense what's going on here. So I'm actually going to pull a link up to one of our tools that we use for analyzing transactions. So you can see this tells me right away that it was a swap, and the address that executed the swap, the actual smart contract wallet, was this 0xADE. So it's this address here, which makes sense because that's where the swap was. These are kind of in backwards order because it sent, the customer wallet sent USDC and got back the USDT, which is a little hard to figure out from, from Etherscan or Arbiscan here. And the sender of this was this E62 address. So I'm just going to swap our view here to the E62. So here you can see that it says what the transaction was is a submit transaction batch, which is that smart contract execution. And it says that it was a swap done via account abstraction on behalf of this other wallet. So here it is telling us that this is the wallet that was the customer, which makes it a little bit easier to understand, So if I go back to this one here. Oops. So I'm going to just skip through a few of these details because I think they're probably more than we care about here. All right, so with the smart contract stuff, we're still in a place where the tooling is a little bit underpowered for this. If you find yourself pulling data for smart contract wallets, maybe give us a shout and we'll take a look at it and see how things are looking and see if we can help you out with the tools, because it's pretty tough. Even for someone like me who spends all of my time on data, when I land on this page, I'm really working to figure out what it is that I'm looking at on these. So there's one more thing I just kind of wanted to highlight, one more example here of a transaction. So it's a swap. We swapped some CRO for whatever this full token is. CRO is the native token on the Kronos chain. So we can see the function is swap ETH for exact tokens. But there's a little bit of a weird thing here, which is that the amount that we sent and the amount that we swapped are not accurate. They don't line up. And the reason for that is because in this case, it was a native token, and this is relevant to what we were talking about earlier. They weren't paying with a wrapped token, they were paying with a native token. And the way that swaps work is you approve the swap, you approve the swap router to spend your token, and then you say, okay, now do a swap, and the router pulls tokens out of your wallet to do the swap. But with the native coin, you can't approve someone else to spend the native coin. You have to actually send the native coin in the transaction when you run it. And in this case, what happened was they got an estimate from the swap router that they needed to send 26.29 or whatever that amount was, and they sent it, but the prices had shifted and they were able to get a little bit of a refund when they were purchasing that token. And so that had to be sent back to them because the full amount that they'd sent went along, unlike a token that would have just pulled the amount that it needed in the first place. So to get to kind of the final swap amount here, we needed to take into account the refund that's coming back. I really should have put these links where I could get them without having to flip around in my presentation. I'm just going to open this up in our toolies too, because it's easier to see.
So Ben, assuming somebody made 100 transactions like this on Kronos or something like that, like a few cents is not like a massive ordeal, but when it becomes thousands of transactions or whatever, like eventually it adds up to a wonky sum at the end of doing all of the reporting and looking at it if it's wrong.
Spoken as not an accountant, I think. Oh, it's only off by a little bit. It's fine.
Well, yeah, but that's what I mean is like if it's 1,000 transactions that are like this, eventually it adds up. It's kind of like what you're getting at with it being.
Well, I mean, I guess my assumption is, I mean, look, as a software guy and a data guy, crypto should be, blockchain should be the ultimate final solution here, because the data is all there and the data can't be changed. It's immutable. And the data is perfect because it tells you exactly what happened, right? And it's crazy that we would accept that in getting the data and bringing it over to another system that we lose fidelity or we lose accuracy, because it doesn't need to be that, because we have all the data. We just have to do the work right to make sure it happens. So in this case, if you only looked at what you had sent and what you received, then yeah, you would have your data wrong. But as long as you take into account every transfer that took place, it should tie out exactly. Like there should be no difference. And I would say that generically, if you are tying out somebody's books and they're off, then there is a problem in the data process, because they literally can't be off when it comes to the blockchain. Like they have to be right. Every detail is accounted for somewhere, somehow. So if they don't tie out perfectly, then there's a problem in the data pipeline.
It's funny you bring that up too, because we have, I know many of the people here are familiar with our Trip Around the Cryptoverse program. And I definitely want to get you guys into that in the way that I'm explaining, but let me make sure there's no subledgers here on the call. So all of our subledger partners are using, so in that video, if you're not familiar, Taylor exports all of the information to be reconciled from the blockchain, and he's using Excel files. So he's doing a lot of what you're talking about now, but the long, tedious way just to build fundamental skills. And then what we're doing is we're giving those same wallet addresses and transaction hashes to our subledger partners. And so far, every single subledger has a different reconciliation amount. Like some are off a little, some are off a lot. The numbers completely different. So it proves a few things. There's a kink in the system somewhere, and I think that's what you guys are working to solve.
Yeah.
That's also proof that there's not a single platform out there that is perfect, and they're all missing something. And the ultimate thing for everybody here at the conference and the community and everything is you need to do your own due diligence and learn this stuff, because when you're off, where do you begin to figure that out? How do you work to solve that? To Christian's point, like it should be zero. If it's not zero, I mean, maybe your client is okay with not zero, but to fully do your job correctly, it should be zero. So
yeah,
really good points to bring up.
Yeah, we had actually the last couple days I've been working on a bunch of Solana stuff for one of our customers, and there's there's one transaction where somebody is sending hundreds of billions of bonk, that's like a meme token thing, and the transaction is off by 0.00002 bonk, which, I mean, whatever.
Right.
It's 100 billion. Like,
Yeah.
what does that matter? But
Right.
but I don't deal with what does that matter. Like, it should be
should be
accurate, because there's definitely a correct answer to how much was transferred. And we only want to have the correct answer, because we're creating downstream problems for you and for everybody else if the starting point for that data isn't right. So
yeah, but Ben, does the IRS even care? I don't think the IRS cares.
I don't want to be the one to find out.
Yeah, for sure.
Hey, sorry, I just missed the past couple minutes, but I just heard. What do you mean by going to zero? What exactly do you mean by that?
I was referring to reconciliation. So when you're doing the actual reconciliation for your clients, I know if someone's doing my taxes and they say, "Oh, it's close enough," I mean, that's not something I would want to hear. So that's what I was referring to, just with a mismatch of data. Depending on the tools you use or how they pull in that information, you may receive a different number, or it could be off, like Ben was saying, 0.00002. So that's what I meant by getting to zero.
Got it. Okay, thank you.
Yeah, so for us, Noves is we're not a subledger, we're not accountants, we're not tax people, so we don't do that step of the process. We're just a data provider that basically all the stuff that we've been talking about here, we do this in automation to bring through data that's already had all of this mess kind of like cleaned up. And we run a reconciliation tool on top of our data streams And when that runs, the expectation is that the difference between the current observed value of what you are holding and what we calculated that you should be holding, that should be 0. And if it's not 0, something is broken. You know, there's no other thing. It is broken if those numbers don't tie out something somewhere, because they should tie out and they should be perfect. So
For sure.
okay, so this was the last transaction that I had in here. We looked at a whole bunch of different swaps. Everything we did here applies for almost every other type of transaction, right? I mean, we process things into about 80 different types of transactions, something like that. And every one of those has so many different implementations of how they work and how they, how they appear. I think that what I was saying earlier about the observing the transfers instead of trying to observe the events from the contract is that we look at the transaction. The way that our software looks at the transaction is the same way that we look at them as humans, which is we try to look at it and say, well, what was the outcome, right? The outcome was these tokens moved here and these tokens moved here, and these are the parties that did that. And then we map that to the logic of what happened. And that helps with, if you understand the idea of what the transactions are trying to do, then it's just a matter of fitting the pieces in, and you are able to sort of cross between different coders, implementations, and the way they decided to do things by understanding the ideas. And I think that, I mean, the fact that you're here, means that you are engaging in a little more depth into what's going on compared to people who want to just get a data stream and then try to go with it without understanding what's happening. And I think we're a lot of years away from being able to do that and be really successful if you're dealing with blockchain stuff. Like, I think you just are going to be required to understand what these ideas are in order to effectively serve customers and to be able to, get their books closed in a way that's accurate and meaningful.
Acceptable, for sure. I love it.
I would love to take the Pepsi challenge on the data reconciliation stuff. We do have a tool that outputs data in a really nice accountant friendly format like this. We're pretty confident that it's accurate. And we do nice things like fill in some meaning to tell you, what those transactions do, so that if you actually have to go look at them, you kind of have a head start on those types of things. So I would love to see how we look on those sample wallets for sure.
Absolutely. I'd love that too. So I don't want to get too deep into things because we are featuring you guys on the podcast very soon. So I want to make sure I don't go too deep on things, but just provide a little more clarity on how someone is using your tool and your platform, and who are these people? Are these the accountants? Are these the subledgers? Or are these the builders? Is that the goal to like,
So the answer is yes, all the above. So we are, our goal is to provide better data than what's available, because I think that there isn't enough attention paid to what people want to do with the data. There's a lot of like, well, here's the data we have, go for it. And we're coming at it from the perspective of, okay, but what is it you want to do with this? And let's do some work to get the data to look like you would want it to be. So we provide, like the data that's on the screen right now, we provide basic like exports that are used by actual accounting firms so that they can pull that into a spreadsheet or pull it into some subledger or whatever, however their process works. We also work directly with subledgers in order to let them tie into our data feeds so they can pull that in instead of getting it from a more raw source where they have to try to interpret what's happening. We also work with a number of other more crypto specific, like we do price feeds for some oracles, and we provide some of our security stuff, works really well for wallets. So we're kind of agnostic to well, maybe that's not quite accurate. I mean, we're happy to serve data for all the use cases that we can find and to sort of tweak the data to fit those specific use cases instead of trying to just serve a generic feed and say everybody's got to transform our data to what, to what they want to do with it. So
Gotcha. I like that. Is there a such thing as unified data? Like, is that the end goal here, where everybody has, whether it's your data that you guys are working with, or just, is that the end goal, or is it still going to be like, what's your vision on that?
yeah, so we are working towards that. There's the way that we kind of view that is that different types of data can be unified in different ways. So for us, for financial data, we can produce this exact sheet that you're looking at here, whether it's on Solana or whether it's on EVM or Cosmos or whatever, we can produce the same sort of data. For more like block explorer data, I mean, you can only unify that so far because the technical details are different, right? So we sort of like group that data, and we're looking to unify that at the highest level that it makes sense, so that people who need financial data don't have to deal with the intricacies of individual and environments. And
Right.
especially right now with the proliferation of chains and everything like that, it's a lot. It's a lot for us. So if your actual job is doing accounting, it's really a lot to try to keep up with all of the things that everybody's doing.
Absolutely. Yeah. I asked because in our field, that's one of the most common conversations, is just the standardization of practices, the understanding of like regulatory and rules. And so I think if we can begin to, and the whole crypto CFOs community is based around just trying to change impact and kind of get everybody together on some sort of standard for the accounting and tax industry. So aligning with you guys, partnering with you guys to, at least through our community, ensure that there's some sort of unified data going through our community and those that are a part of the community, I think it makes sense for all parties involved. So
yeah, that would be great. I mean, the data that we have is based on feedback we've gotten from a lot of people in the space, but I think a more formal agreement on how the data should look would be something we would definitely welcome. Because at the end of the day, we just want the data to be as usable as possible with the least amount of work.
Yep.
On that end. We're happy to do the heavy lifting to get the data to the state that people want the data to be in.
Right. And I think it's where they need it to be. Again, just coming back to zero with everything, including this conversation, it's just where we're educating, we're trying to, pull all these resources together, bring everybody to one circle. And it's important, to start with the data. So, we'll have many more conversations about this. You guys are a big part of the crypto CFOs community. So everybody here will see more of you. And then we can work on different initiatives. Maybe it's like Squeeze is mentioning in the chat, more deep dive educational content, specifically for accountants, reading on the blockchain, reading your data. And then we can figure out where to go from there. So I love it. Love it, love it, love it. Any final questions while we have these gentlemen here?
Hey Ben, what is your typical client? What does your typical client look like, and I guess what mix of clients would you say are tax professionals?
So this is one of those situations where typical is not a useful thing for us, because we're kind of like all over with our sphere of people. So in the accounting and tax space, we basically have two types of customers. We either have like a SaaS platform, where I guess a subledger or similar type of product where they integrate with our system over an API so they can pull the data straight into their tool and they get all of our data right in there. Or we work with a tax firm or an accounting firm who uses some combination of subledgers or whatever process they do, and they have they use a tool to basically just download data out of our system. Like they would run a wallet through or a group of wallets through, they would get an export and they take that into some kind of a process that they have. Maybe they do some step in spreadsheets, or maybe they run it into some other subledger as a manual import, and then they run it out through. If we're not integrated with that subledger, but they want to use our data, then that firm would just use our download to be able to get the data that they want.